Hi everyone, this is Andrew from Trading Mastery and welcome to what is going to be a regular Saturday market wrap update, which I think you'll find enjoyable for those of you that perhaps don't trade with us yet here at Trading Mastery, and for those of you that already do, it will be a little wrap up of what's been going on, but also really an opportunity to share with others. And I encourage our clients to help those that aren't investing in some great quality businesses as we are. In the comment section below, if you'd like to share with others your thoughts on your journey with us as well. So far, this is our first week back in the markets. We took a couple of weeks off over Christmas. We had overall an outstanding finish to 2020. The NASDAQ was up 43.6% for the year. The S&P 500 was up 16.2%. Our portfolio here at Trading Mastery was up just a little over 30% for the calendar year 2020, so we're very pleased with that result. Most of our money for our portfolio is in the NASDAQ, which you'll learn more about as the weeks roll on with me here on these Saturday updates, why we predominantly choose to put our money in US growth businesses. Many of those are in the tech sector, not all of them, as I'll talk about in a few moments. But really 2020 was an extraordinary year. And in the back half of the year, it was really focused on the presidential election and potential stimulus programs for the United States. Obviously, the drama with respect to Donald Trump and him leaving the White House and contesting the election, it really had no negative impact on financial markets because they are always pricing in the future, always looking towards 6 to 9 months out, looking at company earnings, looking at the economy and forecasting what that's likely going to be. And I think most traders came to the conclusion pretty quickly after the election was over that Joe Biden was going to be the president. The question then was, we saw that there was a Senate runoff in Georgia. If you don't get more than 50% of the vote in the United States in the Senate in the election, you need to then have a runoff. And we had actually two of those happening in Georgia. And they're held by Republicans, but they're now going to be held by the Democrats. And what this really means is it's quite significant for the markets to think about longer term, because we now have the Democrats controlling both the Senate and the House of Representatives, where we didn't have that previously. And Joe Biden campaigned on the back of higher corporate taxes, higher capital gains taxes, and a very large stimulus package, which incidentally he announced in the last couple of days some more details around that, about $1.9 trillion. So what we've seen is markets remain optimistic and positive through the month of December. And although the first trading week back for us here at Trading Mastery, the market was down slightly, the companies we hold did reasonably well. We are essentially value investors where we're looking at longer periods of time. So a week in financial markets for us it really doesn't make any significant impact or major difference. We're not day traders, we're not short-term traders, we're longer-term value investors. So what we're seeing right now is markets remain optimistically positive because the stimulus package that was introduced in the US in sort of April of 2020, we saw a very sharp rally on financial markets when those checks went out to Americans, a couple of $1,000s each. And we're going to see that again. I think they've got about $600 so far or thereabouts, and they're going to get another $1,400 from the Biden administration. And that's likely to keep markets positive. And when you've got central banks, the US Fed, and central banks around the world committing to keeping interest rates essentially at zero, and you have inflation at maybe 1 to 1.5, 1.8%, depending on which country you reside in, and bonds are essentially paying zero as well, the only game in town is the stock market. The only game in town is the financial markets. And that's why we're seeing right now a continuation of money being drip-fed back into great quality businesses. And that's where we've got our money. We've got our money positioned in great quality businesses that have a few distinct characteristics about them. One, they have global growth potential. Number two, they have very, very strong balance sheets. Right now, it's very important to make sure that if you are putting money to work in the markets, You're putting that money to work in businesses that have very strong balance sheets and strong financials. The other point that I want to make is that you really need to understand the businesses you invest in. One of the rules of thumb here at Trading Mastery is our clients don't invest their own money in companies they don't understand. And in some cases, for most folks, one of my personal attributes with respect to the way I think of my circle of competence is understanding consumer behaviour and consumer demand. So it's very important to understand the businesses that you own, make sure those businesses have global growth potential, and of course the vast majority of those businesses are listed on the NASDAQ, the S&P 500 and the Russell 2000 in the United States, not too many of them outside the US. We do hold a very small portfolio here in Australia, but that portfolio is held in businesses that have very high returns on capital. And one of the key attributes of getting a high return on investment as a private investor is putting your money into businesses that not only have the core components of long-term share price appreciation, such as a great brand, a great moat, great financials, great management, all of the key things that drive businesses long-term, but what is that business returning with respect to return on capital? In other words, the money that's invested in the business or the money that the business borrows or shareholders inject into the business, what is that returning to shareholders? Most private investors really don't understand how to evaluate that. And we do a very strong education program here at Trading Mastery, ensuring our clients understand the importance of that. And what they actually see is over time, the businesses that do have high returns on capital, that are extremely strong financially, have great consumer demand, they have big moats around them, businesses like Apple, etc. The probability is over time, over the long runway that we invest and continue to buy into those businesses, essentially we see the compounding effect that makes a significant difference and meaningful returns over time. That comes from reinvesting dividends, continuing to buy more of these businesses, accumulating more when we can get them at cheaper prices. So the philosophy is not one of complex or difficult. It's a very simple philosophy. Buy great quality businesses, make sure they have high returns on capital, and where we can, buy them when they're cheap. And in 2020, they were very cheap. Some bright spots right now in the markets that we've identified and we're starting to invest and buy some more of is in some banks, both here in Australia and in the United States. And the reason being is because as we get vaccines distributed, as the economic output improves, the credit risk for banks is going to improve. Most of them stopped paying dividends or reduced dividends in 2020. Most of that was because of the regulators in various countries asking them to do that. They're going to start paying those dividends at high rates again. They've been generating a lot of cash. Sitting on that cash, they're going to return that to shareholders in dividends and share buybacks in the case of companies in the US. And that's going to help banks higher. And if you look at banks recently, they've been rising quite sharply. So that's a bright spot on the market right now. On the negative side, moving into 2021, there are some question marks around whether or not we're going to see the same sort of level of recovery in many of the businesses we saw in 2020. So company earnings are going to need to stack up. Vaccines are going to be needed to be put in people's arms, and that's really going to need to make a difference. But right now, in the early part of 2021, the market is focusing on and expecting stimulus from Joe Biden. But what the market is going to need to deal with longer term is higher taxes in the US, corporate taxes. So there's some things that we want to keep an eye on. They're the things we're focusing on right now. And whether or not we see a pullback over the course of the next 3 to 4 months, we'll simply sit and let the market do its thing. What we are focused on here at Trading Mastery is understanding the companies we invest in. That's the most important thing. And as we head into next week, I suspect that we will probably remain fairly neutral, or the sentiment likely will be negative, potentially heading into next week as the market finish off the week on a fairly bearish tone. But as I said earlier, it really doesn't impact us here at Trading Mastery, the volatility in the short term. Volatility and risk for people is when they look at things short term. And we are not looking at things in a very short term window. We are simply investing in great quality businesses that over time will compound and make us a sizable return on investment. So moving forward every Saturday, I'm going to be posting a video just like this one. I encourage you to ask any questions that you might have, and we'll do our best to get back to you with that. I hope you've enjoyed this little update, and next week I'll give you an update on where the markets are, any major news that should be important to you and your portfolio. If you don't have a portfolio, perhaps you might like to jump across to tradingmastery.com.au. There's a free mini course waiting there for you on how to get started the right way. Have a wonderful weekend. I'll see you next week.